My name is Muammar Taufiq.
Hi, my name is Nurhalimah.
Hi, my name is Athiyyah Fachdina.
Hi, my name is Siti Mahbubah.
Hello, my name is Nesviar Ayudakarti.
My name is Andri Sugeng Prasetyo.
We will discuss the counting cycle for trending company. The company counting cycle is the process of making company finance statement for a certain period. A trending company is a company whose main business is buying goods for supplier and reselling them to the customer without changing the shape of the good. 1. Identify the name of the estimates and the group of account related to the transaction. 2. Note the normal balance and type of transaction and identify the balance whether to add or subtract. 3. Also, we have to pay attention to the nominal transaction and must be careful in its writing.
Next, special journal. Special journal or journal group according to the type of transaction. Special journal type 1. Purchase journal. Purchase journal is for recording purchase of merchandise and other goods carried out on credit. This is an example of purchase journal. 2. Sales journal. Sales journal is for recording an item sales transaction on credit. This is an example of sales journal. 3. Cash receipt journal. Cash receipt journal is the record of cash receipt transaction either in the form of check or cash. This is an example of cash receipt journal. Or cash payment journal. Cash payment journal is for recording all cash payment transaction, whether by check or cash. This is an example of cash payment journal.
3. Post to ledgers. The next step is data taken from general journals and special journals into ledgers. This event is called a ledger post. A general ledger is a general accounting record that consolidates entries from all accounting journals and is a classification of similar accounts. The general ledger is the basis for making financial statements and income statements. This is an example of ledger forms. 4. Make a balance sheet. The trial balance has an account based on which is set up to see approve or adjust amount between debit and credit in the accounts in the ledger. The information used to create a balance is from the ledger. That is, each ending balance on each account. Debit and credit position must be balanced. If it is not balanced, there must be an error when recorded from the ledger.
Adjusting journal. Adjusting journal is a result of transaction that affects a number of company accounts and sometimes the presence of new accounts. The example of transactions that occur in trending companies are usually listed stores that are past due. Worksheet is column or column list that is designed in such a way as to facilitate and facilitated the preparation of correct financial statement. The working paper contains data that is useful for preparing financial statement, namely profit or loss statement, reports of change in capital, and balance sheet. Form of work paper from 10 columns.
7. Prepare the financial statement. The information used in the financial statement came from a just trial balance. The financial statement consists of 1. Income statement. On my right, you can see the example of income statement. It's the one of the financial statement of a company generated during an accounting period that describe the elements of the company's income and expense so as to produce as net or loss profit. 2. Statement of owner equities. It's a financial statement that reports the change in the equity section of the balance sheet during an accounting period. 3. Balance sheet. It's the financial statement of a company which includes a
asset, liability, equity at a point in time. It also shows the financial position of business at a given point, such as at the end of the year. And the last, cash flow statement, is a financial statement that summarizes the amount of cash and cash equivalents entering and leaving of the company.
Making a closing entries. Next step is making a closing entries from income statement accounts like revenue and expense. Closing entries is a journal which is made at the end period of accounting to close nominal account for a while. As a result, the accounts going to be zero in the early period of accounting. The accounts are nominal accounts, income summary, and withdrawal. Post-closing trial balance. Post-closing trial balance is a trial balance that is made after closing entries. This step is adjustment between trial balance and closing entries because it need for notes again the accounts which are changed.